This is Matthew Cratter from Bitcoin University, and today I wanted to talk a little bit more about why real estate is a bad inflation hedge. We covered some of this in a previous video where I talked about why I think that Bitcoin is a much better investment than real estate. Some of the reasons I gave were, for example, unlike real estate, Bitcoin is portable, it's seizure resistant, and without ongoing property taxes, insurance, or maintenance costs, which are things that plague real estate but don't plague Bitcoin. In short, Bitcoin does not leak quote-unquote economic energy, while real estate certainly does, because you have all these ongoing costs that you need to pay while you're holding it. And so you need to keep some cash on the side, or you need to actually lease out your property, which comes with its own risks. In that video, I also mentioned that the Bitcoin network enforces your property rights when you own Bitcoin, whereas when you own real estate, you need to trust your government, your police, judicial system, and military ultimately to respect and protect your property rights. And when a regime turns sour, Bitcoin provides a way for people to exit and opt out by moving to a more friendly jurisdiction. Owning Bitcoin, as I concluded in that video, is like having a bank account in cyberspace that no one can censor, confiscate, or devalue. But here's something that I forgot to mention in that video, and that is if you're owning real estate or buying real estate to try to survive an environment with high inflation or hyperinflation, in other words, in a hyperinflationary environment, replacement and repair costs can go up much faster than the underlying value of your real estate. So for example, a new roof for your house may cost $20,000 today, which is, let's say it's 5% of your house's current market value, $400,000. But in a high inflation environment, the cost of replacing that roof could easily double to $40,000 or $80,000 or $160,000, as we've seen in places like Venezuela and Zimbabwe, for example, while the price of your house does not keep up, does not double, especially when the central bank keeps interest rates and thus mortgage rates high, which makes it more difficult for the price of your house to go up. Now imagine a hyperinflationary environment like Argentina or Zimbabwe, where the price for a new roof for your house goes up so much that it eventually exceeds the price that you originally paid for the house. Where are you going to get the cash to replace this roof when it becomes necessary? If you store that rainy day cash in a savings account, as we spoke about in the previous video, it will lose purchasing power and will no longer be able to buy you a new roof when you really need it. So at that point, maybe you're better off storing that rainy day cash for a roof replacement in Bitcoin. But once you've come to that conclusion, why not store all of the value in Bitcoin will be what you will probably come to if you consider it in depth. And this is important to realize. If you cannot afford a new roof for your house when it needs it, the value of your investment in a hyperinflationary environment especially will be impaired by the leaks, by the mold, and by the destruction to your property. If you're finding this video helpful so far, I just ask you to hit that subscribe button, hit the like button, maybe leave a comment as well. Now, I wanted to demonstrate what the money printers have done, what the central bank money printers have done to repair and replacement costs for real estate in the US over the last couple years. And to do that, we're going to be looking at both residential and non-residential charts. There are a lot more of these non-residential data sets available from the Fed, but you can be sure that if a new roof for business costs more, a new roof for a residence costs more as well. Here's the producer price index. Again, this is US government data, so probably understates the inflation. It's probably even worse than this, but this shows roofing contractors for non-residential building work, and we can see how it remained relatively flat, especially for the latter half of the 2010s, and then after the Fed's bout of money printing in early 2020 and 2021, it just went vertical, going from 140 on this index above 200. So that's roofing contractors. We can see something similar for asphalt, shingle, and coating materials, where it really was going sideways in the 2010s and then completely took off as inflation took off. Again, these are the costs, the repair costs, the replacement costs that you're going to need for your real estate. And this gives us an idea what can happen even in the US, which is not yet in a hyperinflationary environment. But we can see how bad it's gotten even in a country which is the world's global reserve currency issuer. Here's HVAC and commercial refrigeration equipment. Obviously, if you have a rental, you're going to need to buy a refrigerator or buy a furnace or an AC for your tenants. Or if you live in the house yourself, you'll need to do this. And we can see the same thing happen to HVAC equipment, completely skyrocketing from 160 to almost 215 over the past few years. Something similar for new industrial building construction. Again, we can see how it's gone vertical in the last few years. You can imagine if the US turns into something like Venezuela or Zimbabwe, no one will be able to afford a new roof for their house. Electrical contractors skyrocketing here as well. concrete contractors, plumbing, heating, and AC, again, fairly flat and then taking off in the last few years as inflation took hold. Also, PPI for inputs to industries, net inputs to residential construction. And we can see something similar happening to residential construction since 2020 and the bout of money printing. So if you're going to buy real estate as an inflation hedge, it's important to remember that you are going to have all these maintenance and replacement costs. And so you should try to buy more dirt, more land, in other words, than buildings. And this is why billionaires like to buy large ranches in Colorado and Wyoming, etc., which are mostly land. We can see Mike Bloomberg bought a new ranch right as inflation was taking off in May of 2020, a $45 million Colorado ranch. Ted Turner's been doing something similar for the past 30 years. He now owns 2 million acres of personal and ranch land. He's one of the largest landholders in the U.S. after the U.S. government. So you can see what smart people are doing. They're not necessarily putting their savings into buildings, but putting it into valuable land. Now, again, this doesn't mean you should buy land in the middle of the Nevada desert. Most of these cases, this is somewhat more high value land. The other problem with land, of course, is that when you have a revolution and when you have political disturbances, the land often gets confiscated. This happened with a decree on land during the Russian Revolution. 150 million acres of arable land, pasture land, and forest land were confiscated and distributed to 25 million communal households. So the problem with land is you cannot take it with you when you flee the country, when you have a hostile new government. Nice thing about Bitcoin is that you can take it with you if you need to flee. And in addition, there's no maintenance or replacement costs that can skyrocket with inflation, as we've seen in this video. Also, Bitcoin currently you don't have to pay any property taxes when you own Bitcoin. And this could be a problem. What happens if the price of your real estate goes up 100% and the property taxes double because they're a fixed percentage, and then you don't have the cash to pay the property tax? This is how many wealthy families have lost houses and farms and ranches over the years. There's certain states like California's Prop 13, which helps to mitigate this, where the property taxes can only go up a little bit each year. And as a result, though, this privileges old wealthy homeowners at the expense of new homeowners. And again, this also doesn't solve the problem of confiscation. Again, the really nice thing about Bitcoin is that it is so portable. And so if your government, your state government or federal government institutes a property tax, you can just leave the state or leave the country with your Bitcoin. And this fact is good for everyone. It's not just good for the wealthy. The fact that Bitcoin makes capital so portable will force every country eventually under a Bitcoin standard or global Bitcoin standard where Bitcoin is valued to treat their citizens better, both rich and poor, so that they don't have a flight of capital and a brain drain as well. And this is, of course, the sovereign individual thesis. So these are all the reasons why I consider Bitcoin to be superior to real estate. In the previous video, I mentioned how I sold off all my investment rentals in late 2020 and moved the money into Bitcoin, and I've really never looked back since then. This is not to say you shouldn't have a piece of land somewhere where you can grow your own food and have a well, etc. But what this does mean is that you should probably have some assets that are more portable in case your entire country goes down the tubes. If you found this video helpful, be sure to hit that subscribe and like button. Hit the notification bell if you want to be notified when I publish my next video. And let me know your questions and comments in the comment section below. Thanks a lot for watching, and I'll see you in the next video.